So for someone that doesn't know, what is creative financing? Kind of just explain the Roundtree methodology a little bit.
Oh man, I love that question. So creative financing is utilizing alternative strategies to get access to finances to fund your project, your deal, your business, or whatever the case may be. And here's what that means. Unfortunately, a lot of the times when a person goes into business, the first thing that they think about is, hey, let me go get a small business loan. To only find out that banks don't give small business loans to new businesses. Although the irony that you can be someone who has no financial worthiness and go and get $100,000 in student loan debt. But you can have a multi-billion-dollar business idea and the bank gives you nothing. People who are a lot smarter than me, who've been in this industry and space a lot longer than me, have figured out there are backdoor methods and loopholes of getting access to capital or funding that can fund their business or their dream. My first aha moment in knowing about this concept was after reading the book Rich Dad Poor Dad. Robert Kiyosaki, we actually learned about Robert Kiyosaki back in 2003 when I joined network marketing, because his book Rich Dad Poor Dad was synonymous to anybody who was in network marketing, because his poor dad taught him to go the conventional route in life, and his rich dad showed him the alternatives to becoming wealthy. And one of those strategies was through real estate. When he got into real estate, he didn't have access to any money. So he utilized what is called creative financing. And creative financing could be any type of way creatively really to take down a deal. It's not necessarily just tied to money. But in the sense of what I'm gonna talk about here, sense, the creative financing strategy that blew my mind when Robert Kiyosaki talked about how he used a credit card to purchase his first investment property. And it blew my mind because when we think of credit cards, we've always thought about going shopping, going to dinner, getting some gas, going on vacation, whatever the case may be. But that is because we haven't been taught the basic financial structure of economics and knowing that credit or debt is still money. And on the reverse of that, that money is actually debt. Because for every dollar that you make, it's taxed. So there's debt tied to the actual physical dollar. And so when I started to learn these concepts, and when I heard Robert Kiyosaki say he bought his first property for about $18,000, he needed to come up with about $4,000 for the down payment, and he used the credit card to come up with the down payment because the bank was going to finance the other 80%. And so he was able to use debt creatively to purchase an investment property that was going to not only pay him enough to service the debt, but also put money into his pocket. And when I heard that, I was like, wow, we've been bamboozled to think we got to save for 67 years to buy and learn how to invest, when we can leverage debt as a form of creative financing in any space or in any industry. And so I remember my first quote unquote round of getting access to creative financing. I got access to about $47,000 in credit cards, and I actually used that to invest into my business. I remember using about $7,000 of that $47,000 to put into different things that I needed within my company. And then I started to look at how economics work. You want to be able to get in low so you can make a profit and eventually sell for higher. I'm like, okay, that $7,000 only cost me about $75 a month. So now my focus wasn't paying back the whole $7,000 immediately. My focus was only servicing the debt on the $75. So now it alleviated the pressure of me going out there trying to operate business in a place of desperation, to where now I'm just taking deals, taking clients who serve no purpose and probably wouldn't be a good fit for my business model or business structure, because now I already know that one client, the average gross revenue on that one client, maybe, let's say it's $500. After I pay everything off and service the debt on the $7,000, I may net $200 of that. And then as I accumulate enough of those $500 clients, eventually I can pay the entire balance off. So then I learned how to utilize that at a grander scale and I bought my very first investment property utilizing the exact same strategy that Robert Kiyosaki talked about. And I bought my first investment property for $25,000 in East Cleveland, Ohio. That $25,000 was the all-in cost, and that property was cash flowing about $975 a month. And so that $25,000 cost me a couple $100 a month. After taxes and insurance and etc., I was able to take the rental payments, service the debt on that $25,000 on that credit card. And the thing about credit cards is that there is no term on the money, which means that your payment is lower. I can make the minimum payment as long as I have to until I could eventually refinance that property, take the equity from that property, tax-free, pay off the credit card, and now I have an income producing property that pays me forever. And then I got the $25,000 back on the card, so now I can repeat that entire process. So when I talk about creative financing, it's really about being able to leverage unconventional credit or unconventional finances or unconventional debt, put it into something that is going to make me money. That money that I make from that debt is going to service the debt that I borrowed, plus give me a return on my investment, which means I still make a net profit after I pay all my debts. But of course, I pre-calculated it to ensure that I will still be able to cash flow after all debts are serviced. And once people really learn that one concept, then they truly understand one of the many ways of how I leverage and utilize creative financing. And again, creative financing can also be where I go into a deal and I work a deal out with the seller to where the seller may hold the note and I pay the seller directly. And I may not come out of pocket anything. So there's so many different ways from the umbrella term creative financing, but from a standpoint that most people are really looking at, understanding what that term means, it's me utilizing unconventional financing to be able to put into it something that is going to produce revenue. And then I take the revenue, service the debt, and then I cash flow the net profits on that. And then I just continue to repeat that cycle. And so that one concept has not only made me millions of dollars, but it's been able to allow me to help so many people change their lives because I was able to teach them fluently enough for them to go out there and be able to replicate that exact same process.